Now, crude prices could skyrocket to $200 a barrel inside 6 months if political unrest continues in the Middle East and North Africa. That's the call from Paul Stevens. Now, he's a leading international energy expert from the Royal Institute of International Affairs at University College London's Chatham House. A prudent call or scaremongering? Jonathan Barratt from Commodity Broking Services with his take on all of this. He's standing by in our Sydney CBD studio. Jonathan, welcome into the show.
Good morning, Carson.
You know, we can throw numbers around like confetti. Will this one stick in the minds of investors?
Look, I think the investors are certainly going to look at that price and say, well, look, what are the consequences, or how's the oil price going to get to that price? And I think what the gentleman was actually referring to was if in fact Saudi Arabia, if in fact Iran, if in fact Iraq, if in fact Beirut, Bahrain, all those areas come together and there is a major conflict, because then 43% of crude comes from that area, so naturally you're going to have an effect, and I think that's what he's saying. If it does spread, this contagion spreads, well then oil prices have no choice but to go up, because we're taking out a very large section of supply.
The issue then becomes how long will they likely stay at that level? And it is all kind of possibility and hypotheses, but in that respect, who would be most likely to intervene to break that logjam?
Look, I actually don't think, Carson, that the powers that be would be out there. I think what you'll find is certain measures will be created prior to those events actually happening. I think one of the interesting things which we've monitored was Friday's prayer day, Day of Rage, and where the oil price actually traded as a result at the end of that. And I think we're starting to get this sense that there is a possibility, but it's a real tail event that something like that will occur. So when I looked at Friday's reactions, I saw the price down around 101. I started to feel, I think that situation is being contained, and it's being contained correctly. But as the gentleman said, look, you've got those tail events, and anything could happen in those tail events if in fact they occur.
Interesting how you've seen Saudi Arabia's leader, King Abdullah bin Abdul Aziz, granting public sector pay workers pay rises now to try and placate all that domestic ferment of tension that's building. Do you sense that that is too little too late, or it could actually just dampen all this unease?
I think it'll dampen. I mean, at the end of the day, each particular, when I went through the package, I think everybody in Saudi Arabia is getting an extra $20,000. So if you're buying it off, then you're certainly stepping in the right direction by giving them a lot of money. And I think it'll have to be the real extremists that will really push it over. But I think the normal guy in the street saying, well, look, I think the king's trying to do something. Remember also, you've got a monarch there of significant importance to their culture. So it's sort of like saying, well, we've had enough of the Queen, we're going to overthrow her. I think that's not the case over there, and I think there are a certain part of society over there that suggests, well, look, that is part of our history, let's keep it. So I think he's doing the right thing.
Let's switch. Let's talk copper, can we, Jonathan? Because there's a really interesting call that's out there that as a key industrial metal, as one of those global barometers of growth, copper tops. So record highs in the copper price have coincided with stock market bull runs. Now we've seen a significant turning south, a sharp pullback this month. Is that telling you that there are broader issues set to play out across not just commodity but equity markets?
Well, I think when you look at copper, 465 high, we're down at about 425 now. China as a consumer, she's the one that I think is really holding the market. If in fact we do see that slow growth in China coming to play, then that will affect demand. Now, regardless of whether you've got a tightness in supply, if you haven't got those people out there buying or China buying, it doesn't matter, the price will still come under pressure. So I think all eyes will be to China as to what her growth forecasts are going to be like, given the set of data we had over the last week. How will that play on the equity markets? Look, I actually don't think it'll be that positive for equity markets, because everyone's basically saying, well, China's the panacea of all our problems and has been for the last 2 years since the GFC. So if China starts to slow down, we're going to slow down, and that'll affect people's pricing in equities and the profitability of companies. So therefore our market could come in for a little bit of a correction. But once again, I think it's all up to what China does.
By definition, you'd expect the dollar, which has been on a bit of a wild ride in the last 48 hours, at one point touching 99.69, hovering just above parity now, that would presumably trigger an unwind.
Well, look, that sort of sentiment would, yes, but look at the volatility we've had in the dollar. You know, 99, 102. I mean, we've had last couple of weeks of high bouts of volatility. So I think the market is forming an opinion that, hey, it shouldn't be this strong, given that we know that China's growth is coming back. They're into a surplus. So I actually think that people's emotions are changing towards how that currency will be. And if anything, a weaker currency, I think, will benefit Australia a little bit more than a stronger one at this present time of the economic cycle.
Jonathan, hold on tight. We do live in fascinating times.
Yeah, we certainly do.
Appreciate it. We'll talk soon.
Okay.